Hey guys, Boris with BK Forex. Welcome to the COM Dollar Technical Review for October 31 and November 4, 2016 for Aussie Dollar, Dollar CAD, Kiwi Dollar. The COM Dollars this week were all relatively weaker, all getting hit on the fact that U.S. yields are starting to go up, so we have a lot of profit taking and liquidation going on. The data this week was really not bad. You know, we had the CPI numbers. They came out pretty positive, but all of it got unwound as U.S. yields began to creep up. We're at 185 on a 10-year, and if that yield looks at 190 by next week because of NFPs, you'll continue to see COM dollars continue to get crushed. In addition to which, oil now dipped below the $50 a barrel level. That's hurting dollar CAD. So all across the COM dollar land, it's profit-taking story, and in fact, it may be profit-taking story actually going forward next week if U.S. yields continue to go higher. For Aussie, we have the RBA on tap. For Canada, we have the employment data on tap on the 4th, and New Zealand doesn't have much on the numbers. So really going to be Australia and Canada as the two primary COM dollars as far as news goes. Nobody's expecting RBA to do anything as far as rates go, but any kind of a hint, and even a slight hint of dovishness, could certainly push Aussie down even further, because right now the market is sort of not pricing in any curve loosening. We're 150. It looks like we're going to be 150 to the end of December. If there is a potential for RBA to take it down to 125 by December, that is at the same time as the Fed is going to take it to 50 basis points in December. Remember, in the currency market, it doesn't matter what the absolute spread is between the two yields. It's the relative direction that matters. And if the direction is compressing, so will the prices. And that's why Aussie looks vulnerable to further sell-off if we see yields go up. Let's take a look at the support resistance, just kind of see where we're at. 75, 77, sort of the same story in the Aussie. That's where we've been for the last couple of weeks. CAD is very different. CAD broke out to 134. It really looks like all systems go to 135. In fact, CAD is one of my favorite dollar long trades. Anything on the dip here. I've been long this thing forever, ever since I've been talking to you, but this week especially, the fact that we took out to 134 is the fact that oil is starting to come in underneath to 49. Iraq and Iran can't seem to agree on any kind of an oil cap. All of those things suggest that we may have a move to 135 in dollar CAD this week. And Kiwi dollar holding bid on a relative basis still relatively strong. We like Kiwi CAD to the upside. That was one of the better trades last week, and I still like it this week probably. But Kiwi itself looking like a run towards the 72s as possible. Let's take a look at the charts here now and see how everything shapes up as far as the COM dollars go. So Aussie is just trapped in this. I mean, Aussie's been in this. Actually, if you think about this, it's been almost 6 months, right? Of just 74, 77, 74, 77. So we failed again at the 77 level this week on the CPI data. We're now back down to 75.50. The one bullish thing I will say on the Aussie, and this is just really just the dollar sell-off at the end of the day. But the one bullish thing that you can't see technically is that we have a series of higher lows here on the bottom, and that suggests maybe Aussie has a chance to run back up to 76.50. But having said this, though, it really faces a series of lower highs off of that end. So whatever rally we have should be relatively modest. Only if we come back to above 77, and most importantly, if we can come back to 77 and hold it above that level, will that create a much more bullish structure for Aussie and create a potential now for fresh season highs above the 77.50. Only that kind of a structure would happen, but you know, it's not out of realm of possibility. When you're looking at the Aussie right now, it certainly looks on a near-term basis more bullish than it does bearish, simply because it held at 75.50. However, having said this, if RBA comes out dovish for any kind of reason, and we break the 75.50, it's a completely different story, and very, very likely we're going to be looking at 74.50. So the bullish case rests on Aussie holding 75.50. The bearish case begins on Aussie breaking the 75.50. That's kind of how the chart shapes up for the week. On dollar CAD, it's been a bullish case pretty much, you know, for the last week or so. The takeout of 34 is the only. We peaked above it, came back down. It'll be interesting to see because the second move above the 34s really opens up the run towards the 35s. Now 35 is a much steeper resistance here. Let me just go to like a 1-year weekly chart. You can see this. So you see, this is where we fell from. 35 was sort of the breakout point, and then became the support point and the breakdown point. So now it's very likely that if we do push our way towards 35, 35 is going to be the chunky area. 35, 35.50 will be the area very likely where dollar CAD is going to stall. But in the meantime, it looks very much like it's focused on moving towards that area as we go. Last week's big bounce off the 130 area certainly was very bullish, and I think we have possibility here for continuation at least to 35. So to me, any retrace in dollar CAD anywhere at 33.50, 33.25, whatever, looks to be a pretty excellent buy point for a move towards the 35s as the week progresses. Now let's go back to the dailies and just finish up with the Kiwi, and we can see that the Kiwi is actually looking quite good on a relative basis. It held bid. We held 71 as support. 70 is the really longer term support. A series of higher lows. And it looks to be like it ready wants to take out the 72s. Kiwi, very low volatility trade at this point, really not moving much. Has a potential possibly to go to 72.50. That's the near term at this point. But Kiwi is sort of very slow as she steady goes. A break below 71s, though, makes the whole construct much more bearish and does push us towards the potential of 71, a retest of the double bottom here or triple bottom here at the 70 handle. So Kiwi could flip around if there is news on the pair, or some other negative movement. 71 is going to be the key level for the Kiwi. So as the week starts out, it's really 75.50 support for Aussie, 7,100 support for Kiwi, and 34 the resistance for dollar CAD. Those are all the areas we want to be watching to determine exactly whether the structure holds or fails at all those levels. Wishing you guys the best of luck, the best of trading. Boris, over and out.